All right, everyone, welcome back to the AG Insider. I'm Captain Silver, and we need to talk about what the mainstream financial media is flooding the internet with today because they are running articles claiming that the precious metals bull run is officially over. They are pointing to a minor dip in paper prices, with silver dropping to $85 and telling you that the bulls are exhausted and safe haven demand is dead despite the massive war in the Middle East. Let me tell you straight to the camera right now, you are being played. This is the ultimate psychological trap, and if you sell your physical metals today, you are falling for the oldest trick in the Wall Street playbook. The suits want me to tell you this isn't financial advice. Of course it isn't. It's a survival guide for a burning theater. Do your own research if you still trust the people who stole your purchasing power. But let me ask you right now, are you panicking and selling your stack because of these fake news headlines? Or are you holding the line and buying the dip? Let me know your exact strategy in the comments below because I need to understand who has the conviction to survive this psychological warfare and who is going to get shaken out. Let me break down the psychological warfare that is being deployed against you right now because this is absolutely critical to understanding what's happening. The COMEX and the big banks operate on a very simple principle. When geopolitical fundamentals are screaming for higher prices, when oil is hitting $96 a barrel, when shipping lanes are closing due to war, when inflation is accelerating, when the dollar is being debased, they temporarily smash the paper futures market to create the illusion that the rally is over. This is not random. This is not market forces. This is deliberate manipulation designed to achieve a specific objective. And that objective is to shake weak hands out of their physical metal positions. Here's how it works. The big banks have massive short positions in the futures market. They make money when the price goes down. But they also need to accumulate physical metal because they know the long-term trajectory is up. So they create these artificial sell-offs by dumping massive amounts of paper contracts on the COMEX. This drives the price down on the paper market, which triggers stop losses on leveraged positions, which creates a cascade of selling that feeds on itself. Retail traders who are using margin or who have stop losses get forced out of their positions. Retail investors who own physical metals see the paper price dropping and they panic. They think the rally is over. They think they need to sell before they lose more money, so they go to their local dealer and they sell their physical silver back at a discount. And who's buying that physical silver? The very same banks and institutions that crashed the paper price. They deliberately create these red days to terrify weak retail hands into selling their physical silver back to the dealers at a discount. Then the dealers sell that physical silver to the banks and the institutions who accumulate at suppressed prices. It is a calculated wealth transfer from the impatient to the elite. The banks are engineering a fake sell-off to accumulate the very last physical ounces at $85 before the real, uncontrollable inflation spike blows the roof off the market. Now let me explain why this is happening right now. The geopolitical fundamentals have never been more bullish for precious metals. We have a war in the Middle East that is disrupting global energy supplies. Oil is at $96 a barrel and climbing. The Strait of Hormuz is functionally impassable. Shipping lanes are closing. Global supply chains are breaking down. Inflation is accelerating. Central banks are printing money. Governments are running massive deficits. The dollar is losing reserve currency status. Every single one of these factors is massively bullish for gold and silver. So why is the paper price dropping? Because the banks are manipulating it. They are using the paper market to create a false narrative that the rally is over, when in reality, the rally is just getting started. Let me give you some specific examples of the propaganda that's being pushed right now. Bloomberg published an article saying that gold and silver are retreating because safe haven demand is fading. That's a lie. Safe haven demand is not fading, it's accelerating. Central banks are buying gold at record rates. Institutional investors are moving into precious metals. Retail demand for physical coins and bars is at multi-year highs. The only thing that's fading is the manipulation in the paper market, and that's why the banks are getting desperate. They know their time is running out, so they're pulling out all the stops to shake out weak hands before the physical market takes over. CNBC ran a segment saying that the precious metals bull run is exhausted because treasury yields are rising and the dollar is strong. That's another lie. Yes, treasury yields are rising, but that's because the bond market is breaking down. Investors are demanding higher yields to compensate for the inflation risk and the default risk of holding U.S. government debt. And yes, the dollar is strong relative to other fiat currencies, but that's only because other fiat currencies are even weaker. The dollar index measures the dollar against a basket of other currencies like the euro, the yen, and the pound. All of those currencies are being debased by their respective central banks, so the dollar looks strong in comparison, but in reality, all fiat currencies are losing purchasing power. The strong dollar narrative is a smokescreen to mask the fact that the entire fiat system is dying. Now let me talk about what's really happening in the physical market because this is where the truth is. While the paper price is being smashed, the physical market is showing signs of extreme tightness. Premiums on physical silver coins and bars are elevated. Delivery times are getting longer. Dealers are reporting that they're having trouble getting inventory from the mints. The mints are struggling to keep up with demand. This is not what happens when a bull run is over. This is what happens when the physical market is diverging from the paper market. The paper market is saying that silver is worth $85, but the physical market is saying that silver is worth $90, $95, $100 or more when you account for premiums and availability. Let me explain why this divergence is so important. The paper market is based on contracts that are mostly cash settled. It's a casino where you bet on price movements without actually owning the metal. The physical market is based on real metal that you can hold in your hand. When the two markets diverge, it means that the paper market is losing credibility. People are starting to realize that paper contracts are not the same as physical metal. And when that realization becomes widespread, the paper market is going to collapse and the price of physical metal is going to explode. Now let me talk about the role of the media in this manipulation. The mainstream financial media is not independent. They are owned by the same corporations and institutions that benefit from the manipulation. Bloomberg, CNBC, The Wall Street Journal, The Financial Times, they all have conflicts of interest. They take advertising money from the big banks. They have executives who sit on the boards of financial institutions. They are not going to report the truth about precious metals because the truth would undermine the interests of their sponsors. So they push the narrative that benefits the banks, which is that the rally is over and you should sell your metals. This is why you cannot trust the mainstream media when it comes to precious metals. They have been wrong at every major turning point. They told you to sell gold in 2008, right before it rallied to $1,900. They told you to sell silver in 2010, right before it rallied to $50. They told you to sell gold in 2015, right before it rallied to $2,900. And now they're telling you to sell again, right before the biggest rally in history. If you listen to them, you will lose. If you do the opposite of what they say, you will win. It's that simple. Now, let me talk about the fundamentals that the media is ignoring. Oil is at $96 a barrel. That's a 20% increase from where it was just a few weeks ago. When energy prices go up, the cost of everything goes up because energy is required to produce and transport everything. This is inflationary. The war in the Middle East is escalating, not de-escalating. Iran is threatening to close the Strait of Hormuz. Shipping companies are avoiding the region. Insurance rates for tankers are skyrocketing. This is disrupting global supply chains and driving up costs. This is inflationary. The U.S. government is running a deficit of over $2 trillion per year. The national debt is over $36 trillion. The interest payments on that debt are over $1 trillion per year. The only way the government can sustain this is by printing money, which is inflationary. The Federal Reserve is trapped. They can't raise rates high enough to stop inflation without crashing the economy. They can't lower rates without making inflation worse. So they're going to choose the lesser of two evils, which is to let inflation run and to debase the currency. This is massively bullish for precious metals. Central banks around the world are buying gold at record rates. China bought over 300 tons of gold in the past year. Russia is accumulating gold. India is accumulating gold. Turkey is accumulating gold. Poland is accumulating gold. These countries understand that the dollar is dying and they need hard assets to back their currencies. They are not selling gold. They are buying gold. And when central banks are net buyers of gold, that tells you everything you need to know about the long-term direction of the price. Now let me talk about the industrial demand for silver, because this is another factor that the media is ignoring. Industrial demand for silver is at all-time highs and growing. AI data centers require massive amounts of silver. Solar panels require silver. Electric vehicles require silver. 5G infrastructure requires silver. Defense systems require silver. Medical devices require silver. The list goes on and on. This industrial demand is inelastic, meaning it doesn't go away when the price goes up. Industrial users need silver to manufacture their products, and they're going to buy it regardless of the price. This creates a floor under the price and ensures that any supply shortage results in a price spike. The global silver market has been in a deficit for multiple years, meaning more silver is being consumed than is being mined. This deficit is growing because industrial demand is growing faster than mine production. Eventually, this deficit is going to result in a supply crisis where there's not enough physical silver to meet demand. And when that happens, the price is going to explode. The banks know this, which is why they're trying to accumulate as much physical silver as they can before the crisis hits. Now let me talk about what you should be doing right now. In a geopolitical crisis of this magnitude, the paper price is a complete illusion. The strong U.S. dollar and rising treasury yields are just a smokescreen masking a dying fiat system. You need to ignore the manipulated tickers. You need to hold your physical ounces with an iron grip. You need to use this artificial Wall Street shakeout to vacuum up even more physical silver at local coin shops before the trap snaps shut. This is not the time to panic. This is the time to be greedy when others are fearful. The banks are trying to scare you into selling your metals so they can buy them cheap. Don't fall for it. The fundamentals have not changed. The war is still raging. Inflation is still accelerating. The dollar is still being debased. Central banks are still buying gold. Industrial demand for silver is still growing. The supply deficit is still widening. Nothing has changed except the paper price, and the paper price is a lie. Let me give you a historical example of this exact scenario. In March 2020, during the COVID pandemic, the paper price of silver dropped from $18 to $12 in a matter of days. The media said the rally was over, that silver was going to crash, that you should sell. But the physical market told a different story. Physical premiums exploded. Dealers ran out of inventory. The mints couldn't keep up with demand. And within 5 months, the paper price rallied from $12 to nearly $30. The people who panicked and sold at $12 missed out on a 150% gain. The people who held and bought more at $12 made a fortune. We're seeing the exact same setup right now. The paper price is being smashed, but the physical market is tight. Premiums are elevated. Availability is declining. This is the signal that the manipulation is breaking down and the physical market is about to take over. When the physical market takes over, the price is going to gap up violently, and if you don't already own physical metal, you won't be able to get it at any price. Now let me address the people who are saying that they need to sell because they can't afford to lose more money. I understand that psychology, but you need to think long-term, not short-term. If you bought silver at $90 and it's now at $85, you haven't lost anything unless you sell. The value of the silver hasn't changed. 1 ounce is still 1 ounce. What's changed is the paper price, which is being manipulated. If you hold, the price will recover and go higher. If you sell, you lock in a loss and you give your metal to the banks at a discount. Don't do their job for them. Let me talk about the opportunity that exists right now. Silver at $85 is a gift. It's a chance to accumulate more physical metal before the next leg up. The banks are giving you a discount, and you should take advantage of it. Go to your local coin shop, call a reputable online dealer, and buy more silver. Buy silver eagles, buy silver rounds, buy silver bars, take delivery, store it securely, and hold it. This is the last chance to accumulate physical silver at double-digit prices before the industrial shortage and the inflation spike push the price into triple digits. Now let me talk about the psychology of holding through a shakeout. It's not easy. It requires conviction, discipline, and a long-term perspective. You have to tune out the noise from the media. You have to ignore the manipulated paper price. You have to focus on the fundamentals and trust the process. The banks are counting on you to panic. They're counting on you to sell. If you hold, you beat them. If you sell, they win. It's that simple. Let me give you a mental framework for thinking about this. Physical silver is not a trade, it's insurance. It's protection against currency debasement, against inflation, against geopolitical chaos. When you buy physical silver, you're not trying to time the market for a quick profit. You're building a position that will protect your wealth over the long term. The paper price is going to fluctuate. There will be ups and downs. But the long-term trajectory is up because the fundamentals are bullish and the fiat system is collapsing. If you can hold through the volatility, you will be rewarded.
Now let me talk about what's going to happen when the trap snaps shut. The banks can only manipulate the paper price for so long. Eventually, the physical market is going to overwhelm the paper market. Industrial users are going to demand physical delivery. Retail investors are going to demand physical delivery. The COMEX vaults are going to run dry. And when that happens, the paper market is going to collapse. The price of physical silver is going to gap up to reflect true supply and demand. We're talking about a move from $85 to $150, $200, $300 or more in a very short period of time. And if you sold your silver at $85 because you believe the media propaganda, you're going to miss the entire move. Let me talk about the role of fear in this manipulation. Fear is the most powerful emotion in financial markets. When people are afraid, they make irrational decisions. They sell at the bottom, they buy at the top, they lose money. The banks understand this, which is why they use fear as a weapon. They crash the price to create fear. They use the media to amplify the fear. They make you think that the rally is over, that you need to sell before you lose everything. But fear is a liar. Fear tells you to do the opposite of what you should do. When you feel fear, that's a signal to hold, not to sell. Now let me talk about the difference between weak hands and strong hands. Weak hands are the people who panic and sell when the price drops. They don't have conviction. They don't understand the fundamentals, and they get shaken out easily. Strong hands are the people who hold through the volatility because they understand the long-term value of what they own. They don't get emotional, they don't panic, and they use dips as buying opportunities. The banks are trying to separate the weak hands from the strong hands. If you're a weak hand, you're going to lose. If you're a strong hand, you're going to win. The media manipulation is going to get much worse as the system fractures, and you need a reliable source of truth to survive. You need to hit the subscribe button and turn on the bell notification right now so you receive my emergency broadcast the exact second this paper illusion shatters and silver violently reverses to the upside. This is not optional. Your financial survival depends on being informed and being positioned correctly. Subscribe now, turn on notifications, and prepare for the reversal. If you want to understand exactly why Wall Street is so desperate to steal your silver right now, you need to see what the massive multinational tech corporations are doing behind closed doors to hoard supply. I expose the entire industrial breakout. Do not wait. Click right here and I will see you in that video.